Hello there. Welcome back to Cost and Management Accounting N6. Still working on a paper of November 2022. This is a question paper of November 2022. Today, we want to look at question 5 on that question paper. And this question 5, we are going to go through this question and we answer the questions that we are required. This question is on contract costing. So we are going to start with 5.1.1. And the question reads, Girls Power Constructors is working on a high school building in Victoria. The following table shows the results of their financial records for July 2019. We are given a table, and there's information that we are given there in terms of contract price, cost incurred, future cost to be incurred, certified work, cash received, provision for defects, which is retention money, and then we've got extras lastly. And then the first part of the question requires us to calculate the total estimated profit. And we are seeing that we have got 5 marks on that first part. First of all, we have to put down the formula for calculating that estimated profit. So we are saying we are on 5.1.1, and the question requires us to prepare the total estimated profit. So the formula that we are going to use for the estimated profit, we have contract. We are going to use the formula for contract price. Contract price. Contract price plus extras. And then we put in brackets the total that we get there. We subtract total estimated cost. Total estimated cost. And this total estimated cost right now, we also have to find it here. We also have to find it here by saying cost incurred, by saying cost incurred, cost incurred plus future, future cost to be incurred. So what we are saying is total estimated profit. We first of all we find the total for cost contract price plus extras. When we find that total, we then subtract the total estimated cost, and then at the total estimated cost would be found it by saying cost incurred plus future costs to be incurred. So if we go back now to our question, we now substitute these values. We go back to our question. And we see that our contract price that we are given there is here, 1,500,000. That's our contract price. And then we have got our extras. Our extras we are given it here is 500,000. And then that is the first part in brackets. Then we subtract the total estimated cost. And estimated cost we are saying costs incurred. We are saying cost incurred, and then if you look at their cost incurred is here is 890,000, and then we add future cost to be incurred, and then future cost to be incurred is here 550,000. So we are just going to substitute those figures. We come back to our formula now. We are saying now our contract price, remember, is 1,500,000. And then we add our extras, and our extras, remember, we have 500,000, and this is in brackets. And then we subtract also the total estimated cost, whereby we're saying cost incurred plus future cost to be incurred. So we are also going to create some brackets there for the estimated costs. Sorry, the cost incurred, remember, we have 890,000. So we are saying 890,000 here. Then we add our future cost to be incurred, which is 550. 550,000 here. Right, having done that now, if we add here, get the total, then we subtract this total, we are going to get the final answer, which is total estimated profit, which is equal to 560,000. So that's what we have there on the first part. Then we move on to the second part to see what we have there. Right, on the second part of the question, we are seeing that the question is saying calculate the profit for the year using formula. We are given 100% times total estimated profit over 1, then we multiply again by cash received over certified work. So total estimated profit is the one that we calculated here, which is 560,000 that we found here on the first part. Then we multiply cash received. Cash received, you are given the year is 1,800,000. Then the certified work, we are also given it here is 2 million. So we can just go and substitute that one. That is 5.1.2. Now we are on 5.1.2. And remember, the formula is saying 100%. We are given the formula 100% times the total estimated profit. And the total estimated profit that we are given here is this one that we got here, 560,000. And it's over 1. And then we multiply by the cash received. Remember, cash received, we can go back to reconfirm the figure that we have for cash received. Cash received, we have it here, 1,800,000. And then certified work again, 2 million here. So we go back there. We say we multiply by 1,800,000. Then we say over 2 million, which is the certified work. Right, you multiply that one, you calculate this, you get 504,000. So that's what we have in terms of 5.1.2. Then obviously we go to the next one and see what the question requires us to calculate. Right, we go to 5.1.3. And 5.1.3 is saying calculate the provision for latent defects. The provision for latent defects. So we can just start by putting down the formula to calculate that one. This is now 5.1.3. And its provision for latent defects. Provision for latent defects. So we find it by saying certified work and then we subtract cash received. Then we go back to our question to find out about our certified work. Go back to the list of balances that we have. For certified work, we have here, certified work is 2 million here. And remember, we are saying certified work minus cash received. The cash received is 1,800,000, which is beneath here, 1,800,000. So we are going to say 2 million minus 1,800,000. So we go back to substitute those figures. We are saying 2 million. Then we subtract 1,800,000. So that's what we have there. So we calculate that one, we get 200,000. So that's what we have in terms of 5.1.3. That is provision for latent defects. So we go to the next one again to see what we have. We are now on 5.1.4, which is now the last one, first part. Calculate the adjusted profit for the year, taking the provision for latent defects into consideration. So this is now the adjusted profit. So we also have to take note of the formula before we calculate it. We also have to take note of the formula before we calculate it. So we are now on 5.1.4. 5.1.4, and this requires us to calculate the adjusted profit. And remember, for the adjusted profit, the formula, we are saying profit for the year. Profit for the year. Then we subtract provision for latent defects. Then we subtract that one. You're not getting the figure that we have for adjusted profit. So we start by identifying the profit. The profit for the year. Profit for the year. So if we come to the question, you'd see that the profit for the year is given here on 5.1.2. That's where we're going to get the figure for profit for the year. And then we are subtracting provision for latent defects, and provision for latent defects is here on 5.1.3. 5.1.3. That's where we have provision for latent defects. So we go back there to see the figures that we found there in terms of those ones. That is 5.1.2 and 5.1.3. We are seeing this is 5.1.2. We got 504 for profit for the year, 504,000. And then provision for latent defects, we have 200,000 here. So we're just going to substitute that one. We come here now, we say our profit for the year is 504,000. Then we subtract provision for latent defects, which is this one, 200,000. Then when we subtract 2, we are going to get 304,000. So that's what we have in 5.1.4. So we move on. The next question is 5.2. 5.2. So we are now on 5.2. Right, we come here. 5.2 is just below first part. We are given banner builders. Banner builders is busy with contract XXX. And the table below shows the results for the financial year ended 31 August 2019. So we are given a table that we are given there. And then the first question is saying calculate the depreciation on the machinery. Calculate the depreciation on the machinery. So if you check the balances that we are given there, you will see that on machinery, it's year and year. That's where we have the figures for machinery. And we know that depreciation on its own represents the loss of value of a non-current asset or a fixed asset. And here we're not given a rate in terms of a rate in the form of a percentage that you can use to calculate and say percentage of maybe of cost or net book value, depending on the method of calculating depreciation that will be given in the question. We are only given the balances at the beginning and at the end of the period. So here is a machinery balance 010518, which is the end of the period, and we've got this one is 3104. Sorry, this one is the beginning because it's 2018. This one represents the beginning of the period, and this one is the end of the period. So it means this machinery has lost value from 700,000 to 450,000. So to find the depreciation, you just find the difference between the two. That is 700,000 minus 450,000, and then you get your depreciation. So that's how we are going to calculate that one on 5.2.1. This is 5.2.1, and we are saying depreciation. We are saying it's equal to 700,000. Then we subtract 450,000. And then the answer that you are going to get there is 250,000. That's what we have there. Then we go to the next question. The next question is just beneath that. Let's check out what it requires us to calculate there. The next question is 5.2.2 is saying calculate the total material used for the contract. Calculate the total material used for the contract. So we are going to find out the value of the material that we are issued to the contract. The material that we are issued. So we have information that we have there here. Material issued, we have 300,000 here. It's issued, and then we also check any material that was also issued to the contract. We've got material transferred from another contract. So this one was transferred also to be used. So we're going to add this one, and then we add with this one. And then any material which were withdrawn, any material withdrawn is going to reduce the material used, because when the material was withdrawn, it means it wasn't used. So we check out for that material. We check out for that material. Let's try to find out the information that we are given. We have this one, material returned to suppliers. It was retained, so it was not used. We're going to subtract it. And then we check another one. If we have it, we also have material transferred to another contract here. Again, 60,000 was not used. So we are going to add this one plus this one. The total, we subtract 10,000, we subtract also 60,000. So that's how we are going to calculate this one. We come here on the answer section there. So we are now on 5.2.2. And we are saying we want material used. So we are saying we are adding the material that we issued, 300,000 plus 100,000. Then the total, we said we subtract the one that was retained. So in brackets again, we add the one that was retained with 10,000. 10,000 plus the other one was 60,000. So we calculate that one, we get 330,000. So this was the answer that we have in terms of 5.2.2. So we move on to the next one, which is to be the last one. Check out what we have there. The last one is saying calculate the percentage of completion using certified work as a basis. The percentage of completion using certified work as the basis. So what is important is to put down the formula first, then we just substitute the figures that we are having in the question. So here we are now on 5.2.3. And the formula is saying percentage of completion. It is equal to certified work over total contract price. Total contract price times 100 over 1. That's how we are going to find the percentage of completion. Remember, we are supposed to present it as a percentage, so we are going to multiply by 100 over 1. So it's just a matter of going there in the question and try to find out the figures that we have for certified work, and then the figure that we are having for total contract price. So we go back. Their contracts, we start with certified work. Certified work, we are given each year is 1,500,000. Then we check out for contract price. Right, so we see that contract price is given here is 3 million. We are given here is 3 million. And remember, here the question is saying calculate the percentage of completion using certified work as a basis. So certified work is we are using it as a basis. That's why we are putting it there as a numerator. We are saying certified work over total contract price. So that's what we have. So the figures that we have there, we have confirmed them. Certified work 1,500,000. Then our contract price we are given at the beginning of the question, that is 3 million. So we can go and substitute those figures. Here now here. So we are now saying now certified work, remember, is 1,500,000. Then we divide by this total contract price, which is 3 million. Then we multiply by 100 over 1. Then we try to calculate that one. But by me looking at that fraction here, we are going to see that 1,500,000 is half of this one. So obviously we are going to get a 0.5 here. Then you multiply by 100, you get 50%. So answer that we get there is going to be 50%. So this is the percentage of completion. So this marks the end of our question. Thank you for listening. Stay tuned for more videos to come. Those who haven't subscribed, please subscribe and share. We'll meet again in the next video. With that, I'm signing out.